Hey everyone, welcome back to Corporate Decoder, the place where we deconstruct the financial world a little bit at a time to see if this company is actually getting ahead or just spinning its wheels. Today we're diving into a report from BioXcel's Therapeutics Inc., a company that's been in the news for its work in developing new medicines. Now, the first thing they want us to know is about some upcoming appearances. Their CEO, Dr. Vimal Mehta, will be at a big conference called the Canaccord Genuity 45th Annual Growth Conference. Think of it as a place where the company can tell its story to investors and analysts, hoping to get them excited about what's coming next. It's a standard move to try and generate buzz and confidence. But the really juicy stuff in this report is all about how BioXcel has been raising money to keep its projects moving forward. Companies like this burn through cash fast when they're developing new drugs, so getting that funding is a big deal. They've been working to meet what's called a financing covenant, which is basically a promise they made to their lenders, which in this case is Oaktree Fund Administration LLC. This section lays out what they had to do. First, by November 27, 2024, they needed to bring in at least $7 million from selling more of their stock or other similar financial tools. Then by March 15th of this year, they needed to have at least $18 million in total, which could include money from selling more stock, partners they work with, selling off some assets, or even borrowing money under certain conditions. And finally, a bigger hurdle by August 15th of this year, they needed to have at least $18 million in total, which could include money from selling more stock, partners they work with, selling off some assets, or even borrowing money under certain conditions. And finally, a bigger hurdle by August 15th of this year, they needed to have released a total of $29 million. This is pretty typical for companies in their stage, always needing to show the money men they can keep the lights on and the research going. Did they make it? Let's look at the actions they took. Back in late November, they sold a bunch of their common stock and some special options called warrants. They managed to bring in about $6.2 million. This was a good start, but it wasn't enough to meet the bigger targets yet. Then fast forward to March of this year, they did another financing round, bringing in another $13 million. This is good news, showing they can still attract investors even with the ups and downs. They also started something called an at-the-market offering, or ATM. This is like having a shelf where they can sell shares whenever the price is right, without needing to do a big fanfare each time. Through this program, they've sold more shares and raked in another $11.2 million. So let's add it all up. After the November deals, the March deals, and the ATM program, BioXcel has raised a total of about $30.4 million. And importantly, this means they've met that big $29 million target they promised to Oaktree. This is a critical point. It shows they can and did meet their financial obligations, which maintains their credibility with lenders and gives them the breathing room to keep operating. Looking at BioXcel, they're in a tough industry. Drug development is a long and expensive game, and success is far from guaranteed. The fact that they've successfully navigated these financing requirements is a definite positive. It suggests good financial management and the ability to convince investors to keep funding their research. However, it's also important to remember that raising money often means selling more shares. When more shares are out there, it can make each individual share less valuable if the company's overall worth doesn't grow just as fast. They need to ensure their drug development pipeline translates into actual approved and marketable products to really drive up the company's value. The upcoming conference participation is a chance for them to show off any progress they've made. Investors will be watching closely to see if the company can deliver on its promises and if the science behind their drugs is truly groundbreaking. My take on BioXcel right now is that they are a company actively managing its financial survival while pushing forward with innovation. They've proven they can secure essential funding, which is a major hurdle for any biotech firm. The key risk, as always, is the success of their drug pipeline. If their clinical trials don't yield positive results, or if regulatory approvals are delayed, those financing efforts might look less impressive down the line. On the flip side, a major drug approval could make all these fundraising efforts seem like a distant memory, leading to significant growth. They're in a high-stakes game, and for now they've managed to stay in the game. What are your thoughts on BioXcel's funding strategy and their future prospects? Let me know in the comments below. If you found this breakdown helpful, give this video a thumbs up and make sure you subscribe to Corporate Decoder for more in-depth looks at company filings. You can also join our Discord community for more discussions, linked in the description. Thanks for watching, and I'll see you in the next deep dive.